You're watching Masters in Trading Live with Jonathan Rose.
Friends, I gotta fix my camera. Hello, everybody. How you guys doing? I hope everybody had an awesome Memorial Day weekend. My name is Jonathan Rose. I'm the founder of Masters in Trading, and every single trading day we get on live at 11 o'clock Eastern to help you find some really darn good trades. Just got back from Memorial Day. I walked in. We had the surprise, not one, but we had two names over 100% winner. One, Oklo, OKLO. Sam Altman's on the board. We'll talk about this one. And then INSM is up 115%. INSM was one of the top three in our advanced notice names last week. So great energy in our Discord community. Very excited to get into the topics today. 4 topics. Oklo, monster, triangles, shapes, crack. I got really into crack this weekend. No, just crack spread. Crack spread is an oil spread, really important. Most aren't aware of it. I think you'll like it. And then I have a divergence trade. Let's get into the slides because today is going bonkers. Here we go. I shared this slide last week. Oklo, OKLO. Okay? Oklo's board has approved new at-will employment, offering substantial annual salaries and the potential for hefty discretionary cash bonuses. Additionally, they are granted valuable restricted stock if terminated without cause or for good reason. They receive severance, including salary continuation, full bonuses, health care coverage, accelerated equity vesting, and even more favorable terms. Obviously, nobody wants to invest in a company that comes out with BS like this. The stock went from 18, drops all the way down from 7. One thing I learned as a market maker on the Chicago Board Options Exchange is when stocks move like this, nobody has any clue how to value them. That's just how it is. It's moving too fast. It's moving on just pure nonsense. So when Oklo dropped to 735, I did some research. I realized Sam Altman is on the board. They have real technology on a press release. The lawyers don't love that. So Oklo, 7. Today, it trades up to 1164. VJ jumps in. High risk because it's a binary outcome. We were risking our principal to hopefully grab some really, really nice gains. That was the plan, and I think we were able to accomplish that in Oklo. Awesome trade. Congrats to everybody who hit that one. Very cool. INSM is our other trade. INSM, this thing's up over 100%. Here were the options that were shared. They were shared May 22nd. Today is May 28th. This name had $6 million worth of premium go through. Zach, 2 baby little contracts. Just risking $800. Well, that $800 now looks like $2,230 this week. Zach, heck of a trade. Great, great, great start to a shortened week. Let's look at correlations. When we look at correlations, and when we talk about correlations, this is what we talk about, our divergence, right? So when we look at correlations, we can look at 2 names. That's what I did here. Right? Uber and Lyft. Let me get a pen. Uber and Lyft. You're just comparing one against the other. So that's just 2 names, right? Well, we could also compare 3 names. And when we compare 3, my favorite industries to trade relative value, to trade divergence, is in the oil sector. Because in the oil sector, all of these companies are really moving based upon the price of the underlying. A lot of these companies are doing the exact same thing. And so how they move against one another might just be how that business is working at that given time. So let's talk about that crack spread, because this is a great, great example of a divergence trade. The crack spread is a term used in the oil and gas industry to describe the difference between the price of crude oil and the price of its refined products. Refined products include gasoline, include diesel. This spread is an important indicator for refiners because it represents, whoa, seriously? Are you telling me that there's an indicator that tells us the profit margin of refiners? Is there an indicator that tells me the profit margin of Apple real time? I don't think there is. But there is an indicator that tells us the profit potential of refiners. Because when they're cracking crude oil, you have oil, and then you have RBOB gasoline, you have heating oil, you have natural gas. And these are all correlated. And they're correlated through something called that crack spread. I'll show you what that looks like. Let's get your eyes adjusted, because what I want you to look at is just that white line. This white line is called the crack spread. And all we're doing, it's a little bit of a math. It's actually called a 3-2-1 crack spread because it uses oil, RBOB gasoline, and heating oil against WTI, which is US. What I want you to do is this white line right here, this is the boss. Where she goes, the refiners go. So as she goes down, the refiners go down. As she goes up, who's ever not coming aboard is an absolute buy. As it trades down, it leads the way. Anything that's not trading down is going to trade down. This is a phenomenal trade. So what traders need to do is learn to follow the crack spread. Now, I follow the crack spread for all of the traders in our all access room because I'm always looking for trades. I know right now the crack spread is trading down. The crack spread is offered, right? So if I look at all the refiners, if I just find the most expensive refiner, I could potentially find a darn good trade. How do we do that though? This is called a correlation matrix. And the correlation matrix, and this is all going to be built into our divergence tool. Our correlation matrix is looking at refiners. Okay, these are the refiners. These are going to follow the crack spread, but now we know PSX has a 94 correlation with MPC. Dyno just has a 76 correlation with MPC, but it's still pretty close. What I really want you to see is that they're all so correlated. They're all above 8. Maybe these down 7, fine, but they're all so correlated. So if we look at a chart and we chart a whole bunch of these refiners, we can see, right, they're all moving together. What are the trades? Well, the trades present when highly correlated instruments break apart. Notice how this white is rallying and the green is rallying? Well, the purple and the yellow took their time to catch up. This kind of trading, it feels like it gives me something to hold down. And what I mean by holding down, this white line is rallying. If the crack spread were rallying, then we know definitively those are inexpensive. So I can't stress this enough. I started trading in 1997 to age me a little bit, 49. I'm going to help you. Started trading in 1997, and the first thing I traded was S&P futures against NASDAQ futures. Didn't care about the direction. All I cared about is one against the other, pushing and pulling. Then I traded bonds, the different bonds, all pushing and pulling against one another. The crack spread, the refiners pushing and pulling off one another. Traders want to buy what's inexpensive. Traders want to sell what's expensive. Too many traders are just looking at technical analysis and looking at trades independently. So for everybody who joined our All Access program, what I'm going to do right now is I found one refiner that's significantly off value relative to the rest. And for that, I got a doozy of a trade for you. For everybody else, I'll see you back on here live tomorrow, 11 o'clock Eastern time. Until then, see you later.